Dear viewers, did you see what happened to Nvidia stock price recently? It left the Wall Street shocked with one of the most extreme valuation swings, $1 trillion in less than 3 days. I recently looked at the stock price chart last week looking for reasons for such a sharp swing. Nothing meaningful had changed in the business. No new chip, no breakthrough invention, just sentiment. And for a moment, it felt like deja vu, 1999 all over again. As an analyst, I have seen markets act wild before. This was a reminder of how narrow and emotion driven the AI trade has become. And it makes you wonder, are we in an AI bubble? Now let's be clear, a bubble does not mean that the story is fake. It simply means that prices fly far above the present value, fueled more by emotion than by earnings. They can go higher, much higher, until they don't. Even the skeptics are getting louder. Take Michael Burry, the man who famously bet against the US housing market in 2008, inspiring the big short. According to reports, he is now betting against Nvidia. In simple terms, he profits if Nvidia falls. So what does he see? For one, there are circular revenue allegations where Nvidia's own investments in AI startups might indirectly come back as revenue, making demand look bigger than it actually is. Second, there is ridiculous stock-based compensation plans. And then there is another issue. Are AI chips really going to have such long, useful lives in financial reporting in case the technology becomes obsolete in months? We have seen the cycle in solar, semiconductors, and EV batteries. Prices fall, performance leaps, but older assets become outdated quickly. But some AI companies seem generous in how slowly they assume their assets will age. So, what should you do, dear investor? How do you ride the AI wave without getting washed out by it? Strategy number one, don't bet on AI, bet on the AI ecosystem. Instead of buying the most chased AI frontrunners in the markets, look at the enablers, the companies that get paid regardless of who wins the race. Picks and shovels worked in the gold rush, they work in the tech as well. Check the link below this video to know more about this opportunity. Strategy 2. Build an anti-AI portfolio. Now this is not about shorting AI, but it is about owning businesses that survive, even thrive because they don't change much. Warren Buffett once put it beautifully when he bought Wrigley chewing gum. Our approach is profiting from the lack of change rather than change. Wrigley won't be hurt by internet, and that's the kind of business I like. So what are India's Wrigleys? Businesses almost immune to tech disruption. Control Print is one such play, a company whose products you use every day without noticing. The last time you bought packaged food, medicine, cement, a glass sheet, or anything with a price tag, you saw a batch number, expiry date, MRP, or product code. That small piece of printed information, that's the world Control Print operates in. It manufactures printers, consumables, spares, and technology used in India's coding and marking industry. And here is a kicker. This industry grows at 1.5 times India's GDP. It is essential, it is regulated, and it is unavoidable. 4 major players dominate the domestic market, and Control Print is not stopping there but exploring adjacencies in digital printing, end-of-line automation, track and trace systems, and recyclable single-serve packaging machines and material. These ventures are still young, but the management expects them to break even soon and turn profitable. The core business in any case remains solid and Wrigley-like. Now do note that this is not an investment recommendation and does not imply any view on the stock. AI may or may not be in a bubble. Sentiment-driven manias usually end the same way, but timing them is a fool's game. So instead, look for picks and shovels of AI, and second, look for disruption-proof businesses that stay relevant in every tech cycle. Control Print fits beautifully into the second bucket, low drama, essential, durable, and with optionality from new ventures. To me, this is the kind of business that keeps working, quietly compounding in the background, no matter what AI, DeepSeek, or the next tech cycle does. Hope you found this information useful. Thank you for watching. Goodbye.